Welcome to part 2 of module 2. For part 2 of module 2, we're going to discuss topics that relate to managing your cash flow. We're going to look at what is a cash flow statement, and we're going to show an example of a cash flow statement. We will also look at how you go about preparing a budget for your business. And then lastly, we'll look at how do you go about obtaining startup capital for your business. Managing cash is very important, especially if it's still a new business. So you need to make sure that you keep sufficient money to be able to cover and pay your expenses. Cash flow is a major problem for most business, and for most businesses, it's the main failure. Not having enough money to keep your business afloat means that you cannot pay your creditors and you cannot cover your expenses. It's therefore that important that you keep sufficient money to be able to cover your expenses. So how can you be able to make sure that you keep sufficient money to cover your expenses? It's important that you keep appropriate records. So managing cash ensures that you have the right amount of money at the right time. It helps in ensuring that you're able to manage your cash flow. Cash flow is a main cause for business failures. You need to make sure that you record money going in and out of a business in a cash book. In a cash book, you will record on a daily basis what money came in, what was the amount, what was the money for. You need to have a system. You need to ensure that you've got receipts as evidence or to support the records that you're going to be recording in your cash book. From your cash book, you can then generate what we call is a cash flow statement. You would prepare your cash flow statement at the end of the month, and your cash flow statement is going to assist you to monitor how your business is performing. It's also going to assist you in terms of how you can be able to better manage your cash within the business. So this is an example of a cash book. A cash book, you will have a date. Under the date, you will record each day what happened, what money came into the business. Under description, you would describe what the transaction was for, whether you were purchasing stock, whether it was sales. Under amount, you'd record the actual rand amount that actually came in. You would then also record whether it was money that came into the business through sales. So under money in, it would be incomes. And then under money out, you would record money that went out of the business. So let's say you were paying rent. So under date, you would have your date, you would have description, rent, repayment, you'd have amount, and then you would not write under money in, you would capture it under money out. The balance is going to be the difference between the money out and the money in. You would have a balance for each and every day. So from this cash book, you would then prepare what we call is a cash flow statement at the end of the month. So in keeping your records, you can have this cash book where you record all daily cash transactions that happen within your business. Once you've compiled a cash book, you then can compile what we call is a cash flow statement. A cash flow statement is going to be a monthly account of how the business is performing. It will also, with a cash flow statement, you'll be able to track the history of the business performance. A cash flow has got a cash flow cycle. The cash flow cycle starts with cash that you purchase stock. You then make payment to your suppliers. You then have what we call is a work in progress, where you make your product or service. You then sell your product or service through sales. and you could sell your sales could be to your debtors, or it could be cash sales, and then you obviously receive cash. So cash flow is the cycle of incoming as well as outgoing of cash within the business. It's important that you improve your cash flow by obviously using credit management. As a business, you may offer credit to your customers, which become what we call are your debtors from time to time. If you are offering credit, you need to monitor those credit purchases. First of all, you need to know your customers. You need to make sure that you do relevant checks so that you know for sure that they are definitely going to pay you at a later stage. Avoid credit by offering your customers discounts for cash sales. If you're going to be selling your goods on credit, make sure that you have credit insurance to cover yourself against bad debts, because certain debtors or clients might never repay credit sales. So to protect yourself as an organization, have credit insurance so that you are able to protect yourself in a case of having bad debts. This is an example of a cash flow statement. Remember, you'd prepare a cash flow statement at the end of each month. So within your cash flow statement, you'd have the balance from the previous month. You would first of all have cash in, which is money that is received within the business. Remember, our cash in is our income. It's money that we get from our sales. It's money that we get from our loans. It could be money that is invested by the owner. So you've got a total for your cash received. In the cash flow statement, we only record cash items. So you would record under your money in any money that was received. You then also need to record any money or cash payments that came out of the business. So if you made any purchases for stock or for suppliers, if you paid rent, if you paid water and electricity, if you paid telephone. You then would do a comparison of the money in and the money out to be able to see how the business is actually performing. It's important, obviously, when you are compiling your cash flow statement to use the cash book that we referred to earlier, because that is where you're going to be extracting the relevant information on the money in as well as the money out that you incurred in the business. So here are just a few notes to remember when you're preparing a cash flow statement. If you make sales on credit, make sure that you indicate the money on your cash flow statement only when you receive the money. So you would not record credit sales in your cash flow. You would not record money from credit sales in your cash flow statement. You would only record those when you receive the money from your debtors as an income. For instance, you might make a sale in January but only get paid by the customer in a month's time. So you would not record it in January, you would record it when you receive it in a month's time in your cash flow statement. Therefore, you only reflect cash received on your cash flow statement in February. Also remember that any savings you put into the business or any loans from the bank also amounts as cash received. So you must record them in your cash flow statement. As a business, you need to plan how you are going to spend your money. So how do you plan how you're going to spend your money? You need to draw up what we call is a budget. A budget gives us information on how you're going to spend your money each month. You also know how much you're going to spend on each expense, how much you're going to spend on salaries, how much you're going to spend on rent, how much you are going to use, how much your expenses in total are going to cost you as a business for the entire month. So budgeting is very, very important, because through budgeting, you are able to actually better manage your finances as well as your money within a business. So a budget indicates your monthly spending. It indicates the cost to actually run your business, because within your budget, you are going to budget for the various different expenses. You are also going to forecast or budget as to how much income you think you are going to generate for the month. A budget is required for a business plan and to obtain finance. If you are wanting to obtain finance, a loan from a bank or a grant, they will always request a budget. The budget is also part of your business plan. A budget is going to assist you in planning your spending so that you budget accordingly and you allocate certain amount to each expenses so that you're able to manage your money properly. In your budget, you must always estimate how much profit you think you are going to generate for that specific month. When it comes to budgeting, there are a few principles that you need to be mindful of. A budget is a tool that helps you to monitor and to control your financial resources within your business. A budget also helps you to control your business. By creating a budget, you are also committing yourself to your targets to actually ensure that as an organization, you're able to meet certain targets. Having a budget helps you to monitor your targets within your organization. A budget can also assist you in terms of managing cash flow within your organization. So budgeting, it's a tool to monitor your finances. You can control your finances. It helps you ensure that the business remains healthy from a financial point of view. A budget also assists you in terms of commitment to creating your targets in achieving them. You can set your budget on an annual basis. You monitor your budget monthly. You can set a budget for the organization. You can also set budgets for the different components and units of your business or your organization. When it comes to creating your budget, you just need to be mindful of the following. When you're creating your budget, be as realistic as possible in terms of costs as well as sales. Make sure that the figures that you budget or that you put on your budgets are as realistic as possible. You can use historical information to budget in terms of capturing the relevant figures. Make sure that your figures are realistic and they are not hyperinflated, or they should represent an accurate representation as much as possible. When it comes to budgeting, budgeting assists you to be able to identify resources that the business has as it's at its disposal, so resources that you currently have. Budgeting also assists you to identify resources that you don't have, that you may need to acquire in order to achieve your goals. There are many different types of budgets. There's cash budgets, there's sales budgets, there's production budgets, there's budgets on material, there's also labor budgets. So you can prepare different types of budgets for your business. When you're drawing up a cash budget, it also allows you to determine the cash position of the business on a monthly basis. So, for example, in a particular month, the business may have a cash shortfall. Then you know that you'd need to find alternative fundings in order to cover this shortfall. So you're able to identify the shortfall before it happens through budgeting. When it comes to budgeting, you need to really be hands-on in terms of monitoring your finances, meaning that you need to constantly check your bank account, you need to constantly be watching your sales to check how each product is performing. You need to also monitor your cash going in as well as your cash going out of the business. This is an example of a budget that you can prepare for your business. So when we prepare a budget, you can prepare a monthly budget. So within your budget, you will have a section that will detail your income being your sales or other income. And then you'd also need to budget for your expenses. So you'd list the various expenses that you have within the organization. And then where it says budget, you would basically fill in the figure that you are budgeting or you are estimating or allocating. So if you were creating a budget for the month of June and it's May, so you'd have to forecast what might be the sales in June, what might be the expenses in June. And then at the end of June, you would then complete what we call are the actual figures. The actual figures are the real figures of what was the actual sales, what were the actual expenses that were incurred during the month of June. It's also important to have what we call is a variance or a difference, where you look at the figure that you'd budgeted against the actual to actually see whether you were able to estimate correctly. So make sure that you update your budget. Make sure that when you're creating your budget, you are also as realistic as possible. And also make sure that you are monitoring your budget on a regular basis. As a business, you may require capital to start or to run your existing business. So you need two types of capital. You may need startup capital. Startup capital is the money required to start your business. To obtain startup capital, you can approach banks, you can approach investors, you can approach business enablers. You can also have what we call is an access fund. It's important to note that interest is payable if you are obtaining or applying for a loan from the bank. It's important that you lend only what you can repay. In certain cases, you may not apply for a loan, but you may sell a share or a portion of your business in order to acquire capital. Other capital that you may need in your business is what we call is working capital. Working capital is money that you're going to use to operate or to run your business. Again, for working capital, you could also approach a bank or a financial institution to actually fund or to loan you the money. When it comes to applying for finance via the banks, you will complete a process which will differ from bank to bank. You will in most cases need to compile what we call is a business plan, and you will need to show that you are able to repay the loan. When it comes to obtaining capital from an investor, you will have a written agreement between your company and the investor, which will spell out the roles and the responsibilities of each of the parties. When it comes to applying for or obtaining loans from the bank, you must have some sort of collateral or what we call as security in case you default or you are unable to pay the loan. So there must be collateral as an assurance that the loan will be repaid. So for example, if you are applying for a home loan, the house can be used as collateral should you default or be unable to pay the loan. There's also what we refer to as unsecured loans. With unsecured loans, you do not need to have collateral. You do not need to have some sort of security in case of default, but unsecured loan will normally charge a higher interest. To obtain loans, you could also approach family, friends, as well as private investors. In order to obtain working capital and startup capital or capital for your business, you could also consider using your credit card. But remember that credit card charges higher interest. You could also consider using small loans. These small loans are offered, small business loans are offered by banks. They're also offered by other financial institutions, but they obviously charge a higher interest. In conclusion, finances are an essential part of any business. Without money, a business cannot survive. So it's therefore essential to ensure that a business has got enough funds to fund the business and also to run the business. There are various different types of costs that you need to consider. We spoke about your startup costs, your running costs, your cost of capital. You need to consider all of these when you are embarking on a new venture or if you have an existing business. It's also important that you keep the relevant records to actually track the money flows within your business, to track money coming in as well as money going out. Through record keeping, you are able to track whether the business is successful, is generating a profit, or whether the business is unsuccessful, it's generating a loss. So make sure that in your business you keep the necessary records, and also from time to time review your records to actually check on the performance of the business as well as the organization. Before we end this training, please be aware that we also offer other awareness presentations. Other awareness presentations that are available are basic customer service awareness training, basic bookkeeping training awareness training. These are also available online in a video format, and you are welcome to view these trainings. Should you have any questions, inquiries regarding Module 2, please feel free to send us an email on onlinetrainingfeedback@seda.org.za. When you send your email, on the subject line, please indicate the name of the training so that we are able to respond appropriately. Should there be any other inquiries relating to training, you're also welcome to use this email to give feedback, suggestions, or compliments. Or should you have any concepts that you did not understand, you're also welcome to direct your questions using this email. This brings us to the end of Module 2, which focused on financing a new business venture. We hope that you have learned and gained something as a result of listening to this presentation. Should you have any questions, concerns, comments regarding any information that was shared during this presentation, please kindly visit www.seda.org.za. Thank you for listening, and thank you for paying attention and listening to this video. Thank you.